Oh yeah, that's another something else. So we are live Friday for the Mike and Mario show. Excited to be back. Looking forward to just connecting and talking about recent updates. And of course, just came across my radar that the metals will slam down, but just temporary, of course. But before we dive into that, Mario, how you doing, my friend?
I'm doing well, Mike, and you?
I'm not bad. I'm not bad. Excited. It's a lot of things happening in a good sense. And I want to touch on a little bit of the whole copper issues with the future manipulation and appearing that they're starting to lose control of some things, but I also see they're trying to change the rules of the game as well last minute. But lots of stories worth touching on. And so ultimately, welcome everybody to the live stream. Throw out some topics in the chat, and we can touch on it throughout the show. But Mario, where you want to start, my friend? Lots of stuff to touch on.
Well, maybe we could touch upon what just happened to the paper price of gold and silver.
Yeah.
Gold and silver were doing really well up until an hour ago. Gold was up more than $20
Yeah.
at 1810. Silver was up at like 24.80 almost. And then all of a sudden it just started dropping, falling out of bed. And why is that? Well, because Jay Powell made some comments.
Yeah,
And,
let me see where they go. I lost the article already. Let me grab the article. Man, I got so many articles here. Yeah, so
he confirmed something that everyone knows already. The Fed's going to start tapering in November.
Yeah,
but the market still slammed gold and silver. Some other things also dropped as well, of course. But what's interesting is that he says they're not going to raise rates. It doesn't mean raising rates. And the futures market that trade the Fed funds rate, they're discounting a 70% chance of the first rate hike in June 2022. And what the Fed and the bullion banks and the whole financial establishment is trying to do here is to make it seem that the Federal Reserve cares about the general public, that it's going to fight inflation. We know that the Federal Reserve creates inflation. And last year, when we had the crisis, they had an emergency meeting to cut rates. I think it was in the beginning of March.
Yeah.
Just after I think Rosengren and Kaplan bought their stocks, right? But if they were really concerned about inflation and rising prices, why not come out today and hike rates and surprise everyone?
Yeah.
So all I'm trying to say for those of us who are sometimes frustrated by the paper price movements of gold and silver is that the Fed is nowhere. They're not going to be hawkish. They're going to try to keep inflating as much as possible. And as you say, Mike, the most important thing to do is to get your weight up.
Yeah.
And that means stacking physical gold and physical silver.
Yeah, that is. Oh man, so like just like as of right now, witnessing all this, I have a little bit of excitement in my bones, in regards to just seeing how things are unraveling to where it's becoming harder and harder to really suppress the price. And so, when it takes the Federal Reserve chairman to come out just to blow smoke out his rear end and to get a slight dip like that, for those that were highly anticipating more increases up, this is that opportune buying time to take advantage of it for whatever it's worth, because pretty soon, if not already, because we have I think Keith Neumeyer and a couple other mining companies have decided to withhold silver, and so that's going to create more of a pinch pretty soon. So what's happening in the copper space will definitely work its way to the silver side, and then at that point we might see some fireworks like we could have never imagined. So just to see these little small incremental prices move upward is encouraging, but yeah, we ain't seen nothing yet.
Yeah, Keith Neumeyer is like a little how can I say tip of the iceberg. He's one of the producers who's saying this funny money is not real. I'm going to keep my valuable commodity, my silver, and the same thing is happening with copper. It's slightly different. You have the people who the industries who need copper. They want to have the supply as quickly as possible. And now they don't want to take the chance of waiting for 3 to 6 months. So there's a run on copper. We saw few days ago
Mm-hmm.
on the LME, which is the biggest base metals exchange in the world, the
Yeah.
London Metals Exchange, and we saw that the backwardation went through the roof.
Mm-hmm.
We saw that the price for spot delivery was like $1,000 more than the price for forward delivery, and usually it's the other way around, because you need to pay more for something that's going to be delivered in the future, because you're going to have to store it and the cost of financing that position. But now people want it, they want it now, because they feel that there's going to be a shortage. And it's also a sign that they don't want to hold the dollars, because they think it's going to be a lot higher, the price going forward. So they want to have it now. And you could argue that backwardation maybe just in one commodity, and then you don't see backwardation anywhere else. It's just something that happened, and it has nothing to do with the monetary system. And that's right. But we've seen in the last 12 months backwardation in so many things. And maybe you want to take over and talk a little bit about the gold and silver backwardation, what that would mean. So
so one of the things so before we get to that, just want to read this little clip here, because I remember seeing I think it was Lindsey Williams, one of those videos 5-6 years ago, and he was saying that his elite friends always talked about pay attention to the copper price, that's the way the elite are able to gauge control of the system. And primarily here, I focus on gold and silver, but yet copper, of course, I guess being the bedrock. And so this little statement here says the copper market is seen as a bellwether for economic growth because of the metal's central role in construction, wiring, electronic goods. And so, of course, the supply issue is a concern. But based upon this whole backwardation side of things, and the limited supply of, or the tightening supply, because of course I watch what's his name, Andy Sheckman, all the time talk about how he's experiencing tightness on his side, and of course the Royal Mint having issues being able to secure metals and all that other stuff. But I think, and I'm nowhere near as technical as all these individuals here, but based upon what we're seeing in copper, it's probably good to say that within the next 3 to 6 months, we can also see something of this same magnitude here. But yet also on another article that I wanted to mention here, it looks like they have changed the rules of the game a little bit with copper. Where'd it go?
Oh yeah, they did.
They changed the rules of the game.
Yeah, they did. They actually said that the shorts didn't have to deliver.
And
so
they pushed it back.
out the shorts. Yeah, so that's basically a default. Really. And we've been saying that the same thing would happen with gold and silver. And there are a lot of people who say, oh, you're a conspiracy theorist. Gold and silver, the COMEX will never default. But we've had the LME default on copper. Why wouldn't they default? And the default, I mean, changing the rules. And changing the rules of the game in the middle of the game. It's like, playing basketball, and then you make a three-pointer, and then they say, oh, that's actually just 2 points now, because we've put the area where it's a 3-point further back, so it doesn't count. I mean, that's not fair. That's what they do in these markets. And that's why you have to have physical in your possession. And not depend on these exchanges. These exchanges are all controlled by the banksters. And I use that term because that's what they are, banksters, really.
Yeah, it's a criminal operation designed to fool the public into thinking that there is no true value in monetary metals anymore, just because they want to.
Nor in commodities.
Or in commodities in general. Yeah. And the most valuable thing that we should concern ourselves with are the actual digital financial products they've sold us, such as our, computerized stock portfolios, bond portfolios, you name it.
U.S. treasuries and all that rubbish.
Yeah. So I saw somebody in the chat talk about the price of silver should be. So here's a little U.S. debt clock for whatever it's worth. The dollar to silver ratio, 3,000 an ounce. And then, of course, gold is 21,000 an ounce. Just something to pay attention to.
I know people have mentioned that many times, but I don't really know where they get that number from, that ratio, what it means.
It's the they say
go ahead.
They say it's the I gotta zoom out, but they say it's the the annual mining of silver or gold says a year-over-year increase of the U.S. M2 money supply divided by the yearly world production of silver, in accordance to the figures that they've been given. So, once again, those numbers, I think, of course, are fabricated, but it's just a ballpark figure, I think, to use. And a lot of people in the silver community, just appreciate those numbers. It gives them hope.
Yeah, I mean, yeah, I think we need to, unless we have an emergency, we need to try to hold on as much as possible to our precious metals, especially gold, I would say, because gold will, and silver as well. But having spoken to like Ali yesterday from Beirut, and having spoken to people like Star Path Academy who were in Romania during the collapse, sometimes even if you have real money or some currency that's still worth something, sometimes it's difficult to get anything. And that's going to be the problem. And we need to, I think, prepare for that psychologically, that we will only be able to put our capital, and that is gold and silver, to work after a complete annihilation of the system, not during. Of course, it could help during as well. But
yeah, and speaking of which, I did want to bring that up. I had a chance to watch that interview. So for those that might be just tuning in on RTD side, go check out Manico's interview with the gentleman from Lebanon. And so I saw the first one as well on SB Silver. And so I was thinking about having him on for a live stream at some point if possible. But I want to get your thoughts based upon what he said. Give you a quick summary of everything that came from that interview as far as what you learned or what you might not have known before.
What I didn't know before, watching him on Silver Bullion, and was that I thought when they had a run on their currency in September of 2019, and by that I mean their currency started collapsing versus the dollar. I thought that happened there all the time, but no, they had the dollar and their Lira, they call it, the Lebanese Lira, fixed for about 20 years, and the Lira was convertible any time you wanted into dollars, so it was quite a stable exchange rate. But all of a sudden, it changed. That was September 2019, and and now before that change, the dollar was 1,500 lira, and now it's 22,000. I mean, that's a huge haircut.
Yeah,
it's gone down 10, 12 times. So that's what I think is the biggest lesson there. There's still the dollar and the pound and the euro. They still buys a lot of stuff, but I think what we're witnessing now in commodities is that September 2019 in Lebanon. Yeah, because for them, the dollar was like, it still is like,
it's gold. It's like, it's their version of gold. It's like,
yeah, but for us, it's going to be commodities and gold and silver, and it's starting, I think. And the other thing that I learned, again, it didn't surprise me, is that the most important thing is having friends and having a close-knit community, and try to help people, and not to, if you are in a good position when the collapse happens, not to gloat about it and feel good about it. I think he's right to have compassion for other people. And maybe you could go into the story from Venezuela.
Yeah, I can.
It looks like they're going back on a gold standard over there.
Yeah, and I talked about that a little bit last night. But yeah, also, so just having watched that interview as well that you've done with him, and we talked about a little last night as well on the live stream here about how a lot of people, because they're receiving their paychecks or because they're receiving income in dollars, they are feeling like they have been, saved from the great financial collapse while they're benefiting and profiting. But yet it's I think he said that, the inhumane aspect of things, like, just sitting around, feeling like you've made it in the midst of this crisis where we're still in it. And it pales in comparison, I think, to what's ultimately coming, because they're running to dollars as if that's a safe haven. But what happens when the dollar is no longer of any value to them? Where we here in America who use dollars don't even want dollars. Like, that's the things that people should get in their mind of what they're preparing for. So, and to touch on our Venezuela situation, I think the Venezuela, fiasco has been ongoing for quite some time now, but we're still seeing the use cases for metals to this day. And even this article here tries to shine light on metals as if it's outdated by saying that no one used gold in the last a century or something like that. I'm thinking like, okay, that's not true there, but the fact that a hotel room, a half a gram of gold can get you a hotel room for a night, or
that's pretty good value, because let me see where the gram is here. I could tell you 1 gram is about $45. So
it is?
yeah, I mean 1 gram is 42 pounds, right?
Okay.
So you multiply that by let's see, 41 times 30%, 0.3.
Yeah, and
50, 41 times 1.37. If you do that.
And I say that with surprise, because if I was to actually go to try to buy
sorry,
one,
it's $56. Sorry, $56, the spot price per gram, right?
okay.
So you're paying half a gram for the hotel room. That's like 25, 28 bucks.
Yeah.
So it's not bad, is it? I mean, it's
that's not bad. And so that's just, but think about it, Mario, that's just a spot price though. Cause I'm thinking like 57, 53. Yeah. I'm like, it's like 100, like I think maybe might be $90 to get something online from a bullion dealer. So
and the other thing as well, people think, it's difficult and it's tricky. I don't think it is. You get used to it. The shops have a little scale. I have a little scale, and all you do, you put the gold there.
Yeah.
And people, when they start dealing in gold, they know what's fake or not. And I haven't really gone through that Bloomberg article, but of course, the Bloomberg article, of course, is going to be like poo-pooing gold. But
they interviewed a couple of the hotel owner, and because he said he pays his staff, and so he said he pays his staff in gold flakes. So I think he said like 3 gold flakes, or so he said after a while, when you use it so much, you get used to it. You can tell what's real, what's fake. You can tell based upon some of the dirtiness and all the details of the flakes as to what you think they're worth. And once again, it's better to probably get some knockoff flakes that you can pass easily, because people won't even extend their hand for both of our notes. So that's on the shady side of things, but. He said after a while he pays his staff in flakes, and flakes, gold flakes circulate heavily.
They're using the old notes there, the worthless notes, to actually
chop it up,
wrap the gold in. There you go. That's what it's useful for.
Yeah. Speaking of, I see a super chat. I'm gonna get to that 1 second. I appreciate you, but I wanted to Mario, because as things continue to unravel. And the 60-40, portfolio split has really been proven to be of no use to the average person. I read an article a while ago about the Ohio pension fund is having issues. They got 80 billion on deck, and the trustee of the fund said that it's like a hole in a bucket. They're losing more than is coming in. And so I'm thinking about, with all this activity, of course, Bitcoin rallying, and I'm thinking about what in your what in your estimation, based upon all the chaos going on, ideal split of a portfolio. So 60-40. So I was thinking like, you got your preservation bucket, you got your growth bucket, and you got your cash flow bucket. And in your opinion, does that sound like something that people should really be considering now if they have not already, or what?
Well, I'll give you my opinion on these 60-40s, these investment proportion ideas. Well, they're like benchmarks people use. You have to. I don't believe in them. I think people, and I know some people have private pension programs and stuff, but the reason why the Ohio trust or pension system is in a hole is that years ago they promised their beneficiaries, people who retired and were paid, they promised them an 8% annual return yield, right? Payments. And now with rates near zero, they can't. So it's become like a Ponzi scheme. They pay the current retirees with the money that the people that are working paying in now. They're paying them with that money. So
Mhm.
I believe that's the other thing Ali from Lebanon said. Uh, yes, it's a good thing to diversify and have maybe some stocks and bonds. But he
Mhm.
said when the system is unraveling, when you have a collapse, uh, the only thing you need to try to do is to minimize your losses.
Mhm.
That's what you should focus on.
Yeah.
Um, I mean, I think Warren Buffett last year was saying that the worst investment is bonds because uh, you know that you've got their rate of return is so low, like
Mhm.
0 to 2%, and you've got the cost of living going up by 5 or 6. It's just not a credible place to be.
Mhm.
I'm not here to advise on stocks and bonds. I actually think I've said that a few times on my channel that people if they want to invest in themselves,
Mhm.
invest in their close families, yeah, help someone out close to you
Yeah.
that needs to start out or something. Sometimes investing is not just about putting money in the stock market.
Right. 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 And of course, there's many categories of investing. I got the natural, spiritual, and the preparatory side of
Yeah.
investing. But yet, I just thought about that because it came to mind witnessing how the Lebanon crisis is unfolding. Venezuela is a great example of how gold and silver still has use case. And of course, we got the crypto space. So my thought was, you got your preservation bucket, which of course is your sound monetary metals that are just historical. You got your growth bucket, which to me is more speculative. You got your mining stocks, you got your cryptos or whatever else,
Mm, yeah.
whatever
Yeah.
specialized products you want to focus on to grow to then dump back into your preservation bucket. But then also making sure you keep your cash flow coming in strong so you can just dip into the other bucket
Yeah.
accordingly. So
The other thing people forget is always try to because always people we're also told that we have to retire.
mm,
Oh, you have to retire at 65 or
good
at
point.
55. I think that's another fallacy.
Mm,
I mean, I consider myself to be kind of retired now because I don't go to the office every
mhm,
day. I don't leave at 5:30 in the morning and come back at 7.
yeah,
But I'm still active and I'm doing all my videos and it's paying off.
right.
So you need to think outside the box as well. So I think we got a
Yeah,
couple of
here we
super
go.
chats there.
Yeah, so let me see. I'm not gonna butcher your name, but we got the Norwegian Corona. Says deflation is coming first, December or January, will last 10 to 12 months, and then inflation and hyperinflation happening, wait and see. And so I'd assume he meant, the market correction when it happens, the big one, the big kahuna when it happens, that's going to be the deflationary side of things he's referring to. And then he said it's going to last for a year, up to a year. And then inflation, I would say hyperinflation happening. Yeah. So I'm not sure. I don't necessarily agree with the timing and
Well,
order, but I'll run
uh,
with it.
well, I mean, I look at deflation as the destruction of the money supply and
Hmm.
credit.
Hmm.
And if you look at M2 in every country in the world, it's been going like that.
Hmm.
So that's inflation.
Right.
We don't have deflation. I think the deflation will come during the hyperinflation,
Hmm.
which might sound a bit weird. We're
Explain that for
having
me.
yeah, because in a hyperinflation, the currency collapses. Becomes worthless,
Mhm.
and companies go out of business. They can't pay off their debts, so the money just disappears, and that's
Yeah.
deflation.
Yeah.
So it's going to happen all at once.
So
But
watch this, Mario. Not to cut you off.
the
Real
people
quick.
who, yeah,
Real quick. And so just type in deflation, the definition from Wikipedia. It says a
well, that's
decrease in
wrong. Yeah,
the general price level of goods and services. So I think that's what most people think of deflationary, because
yeah,
I'm
but
thinking
I
about
don't.
housing prices collapse, stock
No,
markets
no,
collapse.
no,
No?
no, no. No, because I've been trying to hammer this for years, and
Hmm.
Gur Olgi, because he watches my channel, he
Hmm.
should know by now that inflation is the creation of money and credit out of thin air,
Right.
resulting usually in higher prices, and that's what we're getting now.
Right.
You can have some prices going down during an inflation, and you can have some prices going up during a deflation. A deflation would probably start if the Fed started actually selling its balance sheet, not just tapering and raising rates. It would destroy.
It would pull currency out of the system, right?
Yeah, and it would also bankrupt a lot of people and corporations. And when you do that, the money disappears, right?
Right.
And it would lead to a lot of prices falling, right?
Right.
But
So
you could,
goods and
but
services.
the price of things that we need, though, like food and energy, they can still
Right.
go up in a
Right.
hyper inflationary collapse.
Right.
It sounds really confusing, but yeah, it's not as simple. I don't think we're gonna get the deflation is going to happen during the hyperinflation. You talked to Ali yesterday. He said you can't sell property now in Lebanon because no one has any money.
Right.
But at the same time, you can't buy the price of all the things you need are almost like they're not accessible. People, the average person can't buy anything because the money is worth so very little. So.
Yeah, good points there. So ultimately, deflation, inflation equates to stagflation.
Well, stagflation is what happened in the 70s, the cost of living going up and the economy stagnating. That's a bit different. But yeah, I think the hyperinflation, yeah, it will come. And I think most people, like the viewer, they look at deflation as prices going down,
Right.
i.e.
And so me too.
The CPI. I never remember. I don't remember the last time the CPI was ever negative.
Yeah.
So I don't think we've had deflation in our lifetimes.
Yeah.
And people keep going on about deflation. I mean, it's just and they say, oh, it's because bond yields are so low, it's deflation. Well, bond yields are low because the central banks are printing money to buy these bonds. It's artificial.
Yeah. And so just like my general, way of explaining or trying to put some sense around deflationary, I look at it as like a wormhole where it just sucks everything in. So, and I use just debt, like debt default, an example of what's happening out in China. Like the more dominoes fall, the more debt is defaulting on. The domino effect, it just sucks in more it's just more capital destruction just being sucked into that wormhole, creating a spiral that gets out of control to where
that's
leads
the right word there you use, capital destruction. And right now we don't have capital destruction because they're still souping up the bond markets and the stock market, and even in China they're still going.
So we've only had just the first alleged first default on the dollar bonds from Evergrande. They made their payments in-house with their internal creditors, but then again, I think they defaulted on the.
No, actually, it actually was out this morning that they had a 1 month grace period, and they actually paid the dollar investors, the foreign investors today.
Yeah.
The money hit the Citibank account, $83.5 million. So that's inflationary because it means the bond hasn't disappeared.
Yeah, and I did see that. I think it was one of the Evergrande, like the CEO or the president or something like that. I saw, I think, made that payment or something.
I see. Well, I think we got another super chat.
Let's get to that one. Chris says, appreciate you, man. Says, can a company truly become carbon neutral? Is this possible? Sounds like a farce to me. Just go out of business completely. Have nobody coming in here.
I can explain it. It's the globalist scam. And how do you do that? Well, let's say you have a factory, Chris, and it produces 10 units of carbon every month. So the way to go carbon neutral is to buy the carbon emission futures for 10 units. So that means that you pay for that, but you still keep polluting. It's just a scam. It's a money-making scam for the globalists, for the World Economic Forum. That's how they'll go carbon neutral. And I know about this because when I worked in the futures market, they started this contract back in 2007. The carbon futures, carbon emissions, it's called. It's traded in Europe. It's traded on the ICE exchange, which is owned by Goldman Sachs, by the way. and that's how they're playing this carbon neutral thing, because a lot of these renewable technologies, you need a lot of fossil fuel to build them up, and it's just another control mechanism for the circular World Economic Forum fourth industrial revolution scam.
Yeah.
And hopefully we won't get censored. But and all it will do, they sell it as being great for the environment, for the planet. And I have nothing against things being better for the environment, but their ultimate goal is to accumulate even more capital, money, and control.
Yeah.
And I highly recommend videos by Days of Noah on YouTube. Days is Dayz or Z. He's recently, he does like 1 hour longs or 2 hour long live streams where he talks about this. I highly recommend it.
Interesting. So I'm looking up though. So it's just interesting. Like, once again, it's they create a problem, or they highlight a problem. You know, whether it be global warming, global cooling, and then from that problem they highlighted, they create a financial product off of it.
Oh yeah,
as the alleged solution to neutralize it.
They highlight something that is not even a problem sometimes.
Yeah, real. I mean, a lot of this, I would assume, is just a natural course of life itself, and the earth having gone through its fluctuation of heating, cooling periods, whatever. And of course, all the other stuff. People talk about the grand solar minimum and all those extra things that I don't really get into much. But
you know what would be a really good thing to stop all the consumption, all the exploitation of the environment, and not completely, of course, but we have to have a balanced interaction with nature. It would be to go back to a sound money system where you can't borrow and spend funny money out of thin air.
Yeah.
You know, they never talk about that, of course, and we've been under that system for 50 years. And I would say that would be a great step forward to helping the environment. But of course,
yeah, low blood pressure says carbon credit is the same as crypto. So watch this. As you were just describing that, one came to mind is that how it looks like the fractional reserve lending model might be coming to an end in the near future because of the push towards the central bank digital currency. Therefore, commercial banks won't have to use that model to expand credit or contract, whatever, because the central banks will be in charge of the monetary base at some point in the future. So I wonder, like, I don't see all the too big to fail banks completely going away. Somehow, some way, if this succeeds, they'll be rolled into, because they're already shareholders of the Federal Reserve Bank. So they'll still be a part of the equation at that point. The complete ownership of the world's currency will be in their hands, because they'll no longer rely upon people needing to take out loans and stuff like that, because you'll have to ask for permission through your social credit scheme that they're going to set up as to what you're able to, either use or not use. So we'll see how that plays out. But what are your thoughts as far as if the CBDC stuff succeeds, is rolled out, including social credit aspect? How will the conventional borrowing lending model work, you think, in your opinion?
I think the banks that are left will still lend money, because some people, the UBI that they'll get will not be enough for them, maybe. But I don't think the CBDCs will last that long, because they're going to be just as bad as the current system. And I'm not too sure whether the lending will stop. The central bank will be lending it to you as well. There will be a string attached, and they'll have to have an asset on the other side of. They always have to balance their balance sheet.
Well, so in times past they have, But will that still be the same case in the future
Yeah, I
when?
think they could basically buy. I've heard someone say that the government, the Treasury, could issue a perpetual bond to the
Mhm.
central bank, which is something that they never have to pay back.
Yeah,
Zero coupon perpetual bond, just a fake, it's just an, and they lend that, let's say, 1 trillion to the Federal Reserve, and then
yeah,
the Federal Reserve, that's their asset, and
mhm,
with those assets, they will issue 1 trillion to the population in Fed coin,
yeah,
but it will be linked to that trillion
yeah,
that the federal government has borrowed. But then let's say you get 1,000 Fed coins a month
mhm.
and you spend 2,000 a month, so you're going to have to borrow that. Maybe that's where J.P. Morgan will come in, or any other bank that's still. Or you could borrow from the Fed.
Yeah,
Maybe they'll open a Fed.
line of credit.
Uh, yeah,
So with that whole perpetual bond, everlasting bond, like, it's all charades. Like,
yeah.
who. So like it's just it's crazy to think that that's even a possibility that they could just come up with something just to put on the balance sheet over
Yeah,
here
so
to
it's
balance out there.
out of thin air again. That's why I don't think the CBDCs will succeed in the long term. I could be
Yeah,
wrong, but because the fiat dollars lasted 50 years, so who knows?
yeah. And so ISP mentioned the ISO 2000022, and I put up a little image that I grabbed off the internet from that, and that's the interlinking and interoperability of using XRP Ledger for cross-border payments and ID system and all that stuff. CBDC is built on top of it, and so ISP. I'm curious, just feel free to throw some more thoughts out there, but like that is a part of this enslavement system. Like, so having all those projects succeed, it appears that if you're holding large bags of XRP, that you're going to profit, I guess, in dollar terms. But once again, I think that whole XRP, Stellar, all these projects here, they're programmable as well, because if they're going to help set up the CBDCs, then the CBDCs we know are going to be programmable currency, which has on and off switch that they can program into it. Therefore, are you still confident that you'll be able to enjoy the proceeds of being an early investor and adopter in all those protocols if they turn it against you? And that's where I'm kind of concerned, because those are bankers' coins. They've always been, always will be. Are you going? I mean, will the people still be able to enjoy the fruits of their of their savings if they depend upon those particular projects in particular? Would be my question.
I don't really have an opinion on on XRP and this protocol, or I do have exposure to cryptocurrencies, and I
Mm-hmm.
have had XRP before,
Mm-hmm.
but I'm trying to stay out of the system as much as possible.
I
I
understand.
don't want to, if you have if you live in a neighborhood that
Uh-huh.
has some bad elements,
Yeah.
you try not to talk to them. You try to avoid them,
Yeah.
and that's the way I look at the CBDCs.
Yeah.
A lot of these bankers' coins, if you want to call them,
Yeah.
or the CBDC. I'll try to avoid them like the plague. If I have to deal with them, I will, but I'll try to stay outside of it as much as possible.
Yeah, I understand that, and that's real. So I try to go and I try to touch as many dark holes as I can, just to
Yeah,
try to better process some stuff. But then again, ISPs mentions that they can take your gold too, and anything is possible. And so putting
yeah,
your
but
confidence and faith solely
it's
in
harder.
anything, huh?
It's easier for them to take our. I saw the Department of Justice confiscated Bitcoin, so a
And
few
so
months
I'm
ago.
curious how they
Yeah,
did that. That's what I'm curious
yeah.
to know.
Well, they can. Then they could confiscate yours,
Yeah.
but they could also confiscate your fiat currency that you keep with J.P. Morgan or any other bank. But if you have physical gold and silver and it's well stashed away, it's going to be a lot harder for them to take it.
Hmm. Yeah. So he says, if the bad guys were really in control, do you think we'd still be having this convo? So there, I mean, I'm not like saying that we've already lost, give in, don't do nothing, don't protect yourself, don't stack, don't do all that. I'm just saying that I'm on the skeptical side as well. Like, whole crypto space to me that's not by coincidence. use it to your advantage. Don't depend upon it because
Yeah.
for their good, ultimately, not yours. I believe that's my
Yeah,
personal
I
opinion.
mean, and some people kind of forget the reason for cryptocurrencies and Bitcoin. It was that we wanted to get away from the bankster system, from the
Mhm,
fiat currency system, wanted to go parallel and go peer to peer. And
mhm.
but now it seems like everyone in the crypto space is happy that the
Regulations
regulators are
coming.
getting involved. That you have CFDs and futures. I think that's totally that's the death knell for cryptocurrencies.
Mhm,
And I've actually some people have commented in the last few days, oh, why don't you talk about Bitcoin all-time high? Well, because I try to focus on gold and silver. There's enough people focusing on crypto, but
mhm,
I have to say I've taken advantage of cryptocurrencies, but
mhm.
not by buying and holding or hodling, actually by doing something
The use cases of it.
useful.
Mhm,
Yeah, like putting, using a blockchain based platform
mhm.
like Steemit or Hive or DTube or Odyssey,
Yeah.
where I post my videos and people have the benefit of using that, and I get rewarded in those altcoins.
Mhm,
They might not have done as well as Bitcoin, but they've done well enough, and it's provided me with those altcoins, which I've been able to sometimes turn into fiat. Right now, I'm turning it into Ethereum. I keep it in Ethereum.
mhm. That's real. And so Ethereum is definitely going to be used. It is used. It is being used now. It's going to be a part of the system. It's a part of the future they're setting up for us. But use it at your own. Use it to your own discretion,
Yeah,
whatever. But also, like I mentioned it several years ago. Like I'm a skeptical just because I question everything. Good and bad. So I'm not gun ho on anything other than what's been proven to work, and we know what that is. But is this example right here? This pension situation. These pensions are bleeding out, and it's just a matter of time before they decide to transfer a majority of their capital into Bitcoin. Like
oh yeah,
they're being lured
yeah,
in, they're being suckered in. So if you
oh
hold
yeah,
Bitcoin now, it's gonna go tenfold next
but
next year.
that's what happens when the central banks have kept, they've kept this environment of extra loose monetary
Mhm.
policy, zero rates for
Yeah.
13 years.
Mhm.
And these most pension funds, they, as I said, they promise 8% to their retirees, the people
Yeah.
who are beneficiary. So it's normal that the pension funds are going to go to more and more risky things.
Yeah.
I think even junk bond yields now are below the rate of CPI.
Yeah.
So yeah, I mean, this will end up in tears,
So,
if they
so
and because Bitcoin and the cryptocurrencies, yes, they've done well, but they can take really sharp
turns.
drops
Yeah.
and
So, but
turns. Can you? Yeah,
here's the allocation of their portfolio according to just average target allocation for major U.S. pub. So as of right now, equities is the good portion of it, fixed income, real estate. So a lot of these things are going to be disastrous in the next couple of months, probably.
yeah.
So it's going to be a small blip of like Bitcoin because they can only do Bitcoin through the futures or whatever coming. So it's going to be a small blip of Bitcoin, and then it's going to increase over time. And of course, they have gold as well. I think a small allocation of gold. I think recently, but yet the world is wanting to steer all this park funds into Bitcoin in particular. So
Oh, they
right then
will.
and
Yeah.
there, like just that's a way to take advantage of the wealth transfer and then transfer it into your growth into your
Uh,
preservation bucket.
If you put that chart back up before
Yeah,
we wrap up, have
yeah,
you noticed how all the alternative stuff is getting bigger and bigger
hmm
as interest rates have been going lower and lower? You see,
yeah,
because I remember back in 1997 when I started working for ABN AMRO Bank, they bought the Citibank futures department,
hmm
and I had a prospective client who started out a hedge fund,
hmm
and ABN AMRO Bank said, "Oh, we don't want hedge fund clients; they're too risky."
hmm
And now pension funds are putting their money their money with hedge funds.
Yeah, that's
Hedge funds was supposed to be an investment for the mega wealthy that could, the people who can actually put $1 million with a hedge fund and lose it and
yeah,
not be affected. And
yeah.
now they're putting, pensioners money with hedge funds. I mean, it's
Dangerous.
it's
So I said,
dangerous.
so I'd imagine, I don't know this, can't verify this, but it's good to say, some of these funds here are parked in or are a part of the BlackRock and whatever fund is in Evergrande and all those Chinese, developing properties. So that's a good part of that stuff. So I was mentioned, it's all interconnected. So if they don't pay, then you don't get paid here. It just, it further creates more pain. But all right, so let's get ready to dial back, Mario. As always, man. It was an action-packed show today. Appreciate you. It's always good to connect. Let's end on. So what I started doing last night was just basically asking people to share what they're grateful for. So Mario, if you don't mind, share with us what you're grateful for heading into the weekend.
Let's go, Brandon. I think it's a great slogan.
Yeah.
We're using it here in the UK as well. And I'm grateful that I don't really care about what politicians are going on about this crisis.
Yeah.
Be grateful for not caring. I would say don't care. Just live your life. Try to ignore them. That's what they hate.
Yeah.
That you ignore them. They're talking again about bringing in restrictions in the UK.
Yeah.
And my wife said she went to take her mom to their hairdresser yesterday, and the people who own the hairdresser, they're really concerned about that they have to shut down again because of restrictions. And my wife said, "Oh, I just turned around and said, I'm gonna ignore it. I'm gonna ignore it." And the guy looked at her like that, and he was wearing a mask, and he actually took it off.
Yeah.
And he said, "Oh, yeah, you're right." So just ignore it and say no.
Yeah.
So let's go, Mike.
Yeah. So just on a side note, real quick, I saw an article the other day, and this is like some fact checker validating saying it was fake or whatever. So whatever it is, but if it was real, it was entertaining as heck. But it says a memo banning anti-Joe Biden euphemism, "Let's go, Brandon," is fake. And so somebody posted a letter saying that no government officials are allowed to use the words "Let's go, Brandon" in any form or fashion. So I thought that was funny that, somebody put that out there, fake or real, but it is what it is.
What are you grateful for, Mike?
I'm grateful for, man, an opportunity to continue to share my opinions openly, freely, and to be able to connect with you because you're on the other side, not the other side of the world, but you're, a long ways away, but the internet brought us together and we do a great job just bouncing ideas off each other. So I'm grateful for that. Grateful for my health, grateful for family, grateful to be in the land of the free while it's still free, hoping that we're able to push back as much as we can to keep it free. So, and then of course it's Friday, so I'm about to go have some fun, some form of fat, even though it's getting cold here. But
yeah, it's getting cold here too. I'm grateful for that as well. Being able to speak to you in Detroit, to speak to Ali in Beirut, Lebanon, and all different kinds of people, and basically we all want the same thing, be it in the US, UK, or Lebanon. We just want to be left alone and be free.
Yeah, enjoy life, man. But so also, audience, for those tuning in, definitely just remind yourself to be thankful, to count your blessings while you have them, and then share some love, spread some love. And other than that, it's been great hanging out. Everybody have a great weekend. Be blessed, be safe, and we'll be back at it again next weekend. And enjoy the rest of your week or day, rather. Peace.